I'm Dr. Dave Janda. Welcome back to our Insider Insight Show. I am honored to have back with me someone who is a very dear friend and someone who is freedom's dear friend. Takes a lot of grief for it, by the way. Craig Hemke. You know, for those of you not familiar with Craig, he's put, frankly, and this is not an overstatement, his life on the line doing what he does, and he's done that for years. You know, he had a pretty good life, I think, is probably a good way to put it, occupationally. He was in the financial services industry. He was very successful. And then there came a point in time, lucky for all of us, he decided, you know what? Not so much. I'm out. I don't like what I'm seeing. I don't like the system. I'm out. I'm going to help people a different way. Actually, it's a very similar conclusion I came to when I retired from medicine. Same thing. His was financial services. Mine was medicine. Same thing. And what Craig did was he just didn't keep everything to himself to benefit himself and his family. He took the step of benefiting every person willing to listen and learn about a system that he foresaw as becoming broken, which it is right now and has been for a period of time. And for him being honest and straightforward over the years, he's taken a lot of heat. He's taken the added step of founding, about the same time I started my radio show, he founded tfmetalsreport.com. It's an incredible community. Craig provides incredible insight on an everyday basis. It's second to none in the financial world about giving you information you need to know you'll never get through the bought-off lamestream fake media. And it transcends the financial side, and actually he weaves it into what's happening geopolitically around the world and how it can benefit every person and their financial freedom and their overall freedom. tfmetalsreport.com. It's my honor, privilege, and pleasure to welcome back Craig Hemke. Craig, welcome back.
Dave, you're always so gracious and kind. One of my great honors is having made you into a friend over the years.
I feel the same.
But you're right. My kids were getting a little older. They're now really old.
Mine too.
Not as old as I am. Yeah, yours too.
Yeah, old and boring.
When they were about, 10 and 8, I realized that sand was getting through the hourglass pretty quickly, and I had to do something to be around them more. And I'm just this guy. You can see the office behind me here in my home. I never intended to go down this road. I didn't think this is where the path was taking me, but I just think it's divine providence. I think this is what God wanted me to do with my life. And since I made this decision to be around my family as much as I could, he said, okay, here, now do this. And it has become this. It's just crazy. So I just try to do the best I can, warn people about what I think is coming. And unfortunately seems to be prescient warnings as time marches on.
So let's turn to Frank Zappa, the singer-songwriter. Here's what he said. Your take. He said this years ago. Actually, it's been on my website for 14 years. Quote, "The illusion of freedom, including financial freedom, will continue as long as it's profitable to continue the illusion. At the point where the illusion becomes too expensive to maintain, they'll just take down the scenery, they'll pull back the curtains, they'll move the tables and chairs out of the way, and you'll see the brick wall at the back of the theater." Unquote. We're at the back of the theater right now, and the brick wall is staring at everybody. But some folks, Craig, because of your insight, are going to approach that brick wall a little bit differently than others, and ultimately, I believe, have a much better result based on your advice. Your take on Zappa's quote.
I appreciate that. It sounds like that was the basis of the screenplay for the Truman Show, almost, Dave. Which, I've mentioned that a couple of times. That movie is so old now. I mean, what was it, 20 years ago?
Yeah.
And there's a whole generation of people that never seen it.
No.
And it ends up being one of those. It's like, wow, God, did they go through a wormhole to write this? Because it sure applies to today. The Truman Show with Jim Carrey. So that's kind of what I was thinking about when you were saying that. I wish, my only wish is we could warn more people about what's coming. But at the end of the day, too, it's incumbent upon everybody else to realize it, too. You can't just be bumping along assuming tomorrow is always going to be just like yesterday. The premise of my work, my website was something that just came to me one morning in about 2009. And that's that we're approaching the end of the great Keynesian experiment, which John Maynard Keynes is the economist from the 30s who I was just reminded earlier this morning, he kind of turned economics into a science. They try to treat it as, it's just basically math and statistics, when there are far more variables than that. And one of the certainties, though, of the math and statistics is that when you have a debt-based monetary system, eventually the amount of debt just simply becomes overwhelming. And you cannot create enough cash, send it out in the world, and have it returned to your shores to buy your bonds and keep interest rates low and everything else. The whole thing just eventually collapses on itself. Now, I don't know when that point is, but I suspect that here in the first third of 2025, I think we've all gotten a warning flare shot up in the sky, from the ship that's in trouble that is, warning us that, we might be a little closer to the end of that great experiment than we'd like to admit.
On your website today, you had a writing from Dan Oliver, a financial analyst, and I think you're going to have him on your platform. I think you mentioned
Thursday. Yeah.
And I want just one last thing he had said, the last paragraph, and I want to run it by our listeners and get your take on it. And it's about the end of this great Keynesian experiment, as you've been speaking about for years, as the brick wall that Zappa was talking about, the financial reset, if you want to call it that way, or a financial hopefully controlled demolition versus uncontrolled demolition. Dan Oliver, quote, "One misplaced step could turn a controlled demolition into a panic unwind of the entire global credit bubble," the debt you're talking about. "A central bank bailout would have to be on a scale larger even than COVID. And central bank balance sheets are so weak, there's no guarantee that the next intervention will be successful, in which case paper assets, bonds, stocks, and currencies all collapse in tandem, as has occurred over the years in many an emerging market." Craig.
Yeah. Dave, there's so much there.
Yeah, there is. There's a lot there.
Where do I even start? I applaud. I have the sense that President Trump, knowing he's only got 4 years and after taking a bullet to the ear and everything else, is kind of in a I just don't give a damn mode. He sees the problem. He may not fully comprehend it, but I think he sees the problem and he's like, look, we got one last chance to try to fix this.
Mm-hmm.
And so so we're going to go this way. We're going to have the Doge committee. We're going to slap on these tariffs, hopefully, onshore some manufacturing, and we're going to try to get the debt under control through the Doge committee, less cut spending and all this kind of jazz. And I applaud him. I want him to, I'm not rooting against him.
No, you and me both.
If we can buy us some time,
yeah,
great. Good for my kids.
Mm-hmm.
But I'm afraid that he doesn't have the time, that it's not going to work. And as Dan Oliver points out, this is such a multi-variable system. You've heard me say on the side, I remember when I used to listen. One of the most important moments of my life was when I'm driving across the Nevada desert in 1988, and I hear this voice on there. I don't get one radio station in my little Toyota Tercel as I'm driving. I hear this guy talking, and I'm like, "Who's this?" And it was Rush Limbaugh.
Mm.
Again, this is May of '89, and I always credit Rush Limbaugh for a kind of important point in my life. I was just getting out of college, teaching me to think for myself.
Mm-hmm.
Right? Been spoon-fed all this stuff my whole life,
mm-hmm.
either through the media or through my professors and teachers and stuff. And Rush Limbaugh taught me to think critically, his politics notwithstanding. Just got me to, wait a second, maybe there's more here, And anyway, he always used to talk about the fallacy of the Congressional Budget Office and how they would use a static scoring. So if you came in as president and said, hey, we want to cut taxes, they would say, well, if you cut taxes from this rate to this rate on this level of the economy, that's going to drop revenue from this to this. But we don't live in a static world. We live in a dynamic world. and behaviors change. It's like you can't also just say, well, we're going to raise taxes to this, and it's going to generate this much more revenue but no, people are going to start working less, are going to start sheltering in. I mean, it's a multi variable system. It is a dynamic world, not a static world. And this tariff thing's the same thing.
Mm-hmm.
You can say we're going to raise the tariffs, and it's going to force this country to negotiate with us, and it's going to change this pattern here, and it's going to onshore. In your models, sure. But it's a dynamic world, and that's what the Dan Oliver is referring to. Mm-hmm. You don't know how all these things are going to. One, I don't know if Trump's going to have the time to pull this off, to actually see the effects. But two, my concern is that, again, the unknown unknowns, like the fog of war kind of thing. Remember Rumsfeld used to talk about,
yes.
Once you're going. Or you have a plan until you get punched in the face, like Mike Tyson used to talk about too. And so that's what we have to prepare for. Is all these. You try to think of how things might head, and one of the only real certainty that I know of at this point is that gold, in its relationship to the dollar, is going to get more valuable. I feel pretty confident in that.
Craig, please tell me if I'm wrong, but I believe that a uncontrolled demolition was set in place, if you will. And with the election of Trump 2.0, the plan was for Trump, recognized, I believe, I agree with you, recognize the issue. They've rigged the buildings to come down in their own footprints. I got to try to diffuse that ordinance before it goes off, and if it does go off, to make it more of a controlled demolition. And you're right. He doesn't have 4 years. He probably has 2 years until midterms. Right? Yeah. But one of the implements he was using in this controlled demolition to make it was the tariffs that you brought up. And the problem I had with tariffs, and please tell me if I'm off, tariffs I don't think are a bad idea. He had put out there the fact that they were going to be reciprocal. But then that Liberation Day happened on April 2nd with that globalist Wall Street elf, Howard Lutnick, bringing up this poster board that was actually based on trade deficits and not reciprocal tariffs. Yeah. And that's when the markets went south and have gone south. And in fact, I believe, Craig, took something that was a part of a controlled demolition, protection, if you will, and I believe made it into an uncontrolled demolition, because I believe since then, and you please tell me if I'm off, this was analogous to almost to a significant degree what we saw back in early 2022 when they took Russian assets, usurped them, where every other country said, wait a minute, I can't trust them. I think what happened, the way Lutnick did this, and I don't think it was an accident being the globalist shill that he is, it actually created more uncertainty amongst other folks, which is why we've seen people stepping away from foreign purchases, if you will, of the bond market. Am I reading this wrong?
Yeah, you can see all dollar-denominated asset, U.S. stocks, U.S. bonds, the dollar itself, everything fell sharply in that 3 weeks that followed. And now we're kind of in this phase where we're like, well, what's going to happen next? But no, I think you're reading it exactly right, Dave. And again, it's the unknown unknowns, the unintended consequences. You think you can forecast what's going to happen, but in this system of a million variables, it's like dropping. The metaphor just came to mind now. You got the Plinko game, right?
Yeah, right.
And you got all these pegs, and it doesn't matter where you drop that thing.
Yeah.
You have no idea where it's going to end up going. They drop the thing.
Yeah.
And it doesn't just go bonk right down to the bottom.
No.
And that's kind of what we're going through now. And I'm glad you mentioned too that decision. It was back in about a week after the Ukraine war started. It was the first weekend of March
2022.
Yeah. And that was one of the most significant financial events of our life. It was absolute hubris and arrogance on the part of the Biden administration, his Secretary of the Treasury, Mother Yellen. You could blame it on Blinken, I suppose, who was the Secretary of State. when they froze and commandeered Russia's foreign currency reserve. Look, without getting into the politics of war and everything else, when they did that, that sent a message to the rest of the world that, wait a second, we've lived under this Bretton Woods system, that came out of the World War II with the U.S. dollar as the safe haven and the global reserve global reserve currency and treasuries being the safe haven. We're all going to use a dollar. Wait a second. Now all of a sudden you basically weaponize the dollar by confiscating Russia's foreign currency reserves and kicking them out of the international payment system and not allowing them to access that. And I think countries looked around and went, well, wait a second, if they do that to them, we ever get sided with the U.S., they'll do it with us. And it is not coincident. It is a direct line from there to now. Global central bank gold demand in the last 3 years has been at a record cumulative about 3,500 metric tons of gold net buyers by the central banks, 22, 23, and 24, and it's continuing this year. So what's happening now is like, with Trump and this movement out of dollars, as you said, is like reaching. If that started this wheel moving a little bit faster, moving a dollar away from being the anchor and the treasuries being the anchor of the system, Trump and Lutnick and everybody, it's like Wheel of Fortune, man. Pat just said, "Hey, reach down there and give that wheel a spin." And that's what they did. They boom, and they sped it up even more, and you saw this react. Again, the curious thing now, we got 80 days before Trump's little 100-day more, 90 days, whatever it is. Remember he said, well, we're going to give it 100 days or 90 days or whatever. Well, what's going to happen next? And how are the markets going to respond as we ramp toward that? Again, all of this stuff is unpredictable. Like I said, and the only thing I can say with certainty is I'm sure glad I don't have enough gold, Dave.
Well, no, I'm not sure anyone does, Craig.
Yeah, who does?
And the same with silver.
Yeah.
Right? So one way in which the syndicate, let's call it, has been able to kind of keep a lid on their system, which is been fairly criminal, is the criminal manipulation of commodity markets, and in particular precious metals, gold and silver. Now, Craig, tell me if I'm reading this wrong. When I've seen huge amounts of physical gold, physical silver coming still, even after the tariffs, coming into the United States, right? And actually going to sovereign entities as well. China, Russia, you name it, right? Around the world. When I look at one of the platforms they've used to suppress the price of commodities, and let's say in particular gold and silver, they've used the COMEX. Now, something to me, Craig, and maybe I'm reading this wrong, I put my analytical chemistry hat on. When I look at this, in my medical hat, looking at the patient here, I'm thinking COMEX, this criminal manipulation part that they've used, this platform, is dying. Because I'm seeing what's called open interest going down, volume going up, and I've seen, I believe, a movement of the primary pricing entity platform moving east toward Shanghai and away from what the syndicate has been using over all these decades. Am I looking at this wrong?
Oh, boy, Dave. In part 2 of this interview, we'll take a whole hour to talk about just that.
Yeah, right.
Let's put it this way, because there's history involved in this. Why are there futures markets? Why did they began? The COMEX, the exchange, the commodity exchange in New York, began trading futures contracts on gold and silver and used that as the primary pricing discovery method on January 1 of 1975. December 31st, 1974. And why did it begin then? Was because on January 1, 1975 was when U.S. citizens were allowed to legally own gold again. And they had to come up with a way to not price it in the actual physical exchange of the metal. They had to, no, this is good as gold. This trading of these phony baloney plastic banana. Here's a Rush Limbaugh reference.
Yeah, there you go, yeah.
Good time rock and roll futures contracts. All right, well, let's just fast forward then to today. This 3,500 net metric tons of gold demand over the last 3 years has, in my view, eliminated much of the freely floating available supply of physical gold that's deliverable through London. They are, searching the rack. I mean, there's gold there. Don't get me wrong. It's like there's gold in Fort Knox. It's just that it's not up for sale. It's not up for lease. And so there was an article in the Financial Times back in the middle part of February that instead of a 1 or 2 day settlement system for physical gold in London, it's now 4 to 8 weeks.
Mm-hmm.
Well, wait, if it's there, why? So, okay, so now you're still looking for gold. So where's the next place you're going to go look? The next major Western trading hub, which is these futures contracts in New York.
Mm-hmm.
And so now all of a sudden demand has exploded there too. To me, it's a sign that readily available supply, which backs up this phony baloney plastic banana good time rock and roll derivatives pricing scheme, that readily available supply is dwindling. And you can only get it out of the ground and resupplied that much quicker, and the demand isn't going away. Which, okay, so here's the final part of this answer, Dave. People may look at this, they may hear us talk, and they go, wow, gold's $3,300. And I asked my financial advisor about it, and he said, oh, no, it's either doesn't know anything about it, it's too expensive, whatever. It's not too expensive. And the other way to look at it is it's not that gold is going up in price, it's the dollar that's going down in price relative to gold. And there's no way out of this without the dollar going down in price relative to gold even more, which the inverse of that is the gold price and dollars going up even more. So don't be scared off is all I'm saying by the price you see.
And many in the public realm say, well, so it's big deal that it's moving to the east as far as this pricing platform and a physical exchange. But again, when I look at this, Craig, the dollar loses even more relevance if you're losing their main trading platform of the world here versus in Shanghai, because it's my understanding that they're now putting out a contract on gold in yuan, not dollars.
Yeah.
Right?
Yeah. It's a kind of a roundabout sidestepping maneuver to start essentially making the yuan convertible to gold. Roundabout sidestepping, not just in your face, hey, this like we used to have here until 1971, $35 gets you an ounce of gold. They're not doing that, but it's a roundabout way of converting yuan to gold. It's a process. This process that they've been doing, this goes back to 2008 and 9, which was a wake-up call for all the rest of the globe then, too. Mm-hmm. Oh, wait a second. They're just going to print their way out of this, aren't they? And Dave, at the end of the day, I'm going to reach forward because this book is always nearby. This. Mm-hmm. When you don't have any anchor to your currency, and when nobody wants it,
right?
You get Weimar Germany as the best example. This book is all about just the first couple of pages. You'll read it and go, of what was going on in Germany in the early 1920s, politically, societally, and you'll go, what the heck? It's the same thing 100 years later. And again, the picture here is a guy sweeping up Reichmarks or Deutschmarks, I guess is what they were back then. Mm-hmm. There's so many of them just laying around. You see the guy with a wheelbarrow full of them to go buy a loaf of bread. I don't know if that's how many dollars it's going to take to buy a loaf of bread in the future, but it's the same thing. In the end, it's the same driving force behind it. So, again, President Trump's given it a try. Maybe my understanding of this is so narrow and not nuanced enough that it'll all work out and everything will be fine. I'm not saying the country's going away, but the only thing I can be confident of in this world of all these unintended consequences and the unknown unknowns, the only thing I can be confident of is the dollar is going to be devalued like all of the fiat currency have at present around the world and have since time immemorial. And when that means that where it takes $3,300 to buy an ounce of gold today, someday soon it's going to take $4,400, and then it's going to take $5,500, that sort of thing.
And when we also look at silver, it comes out of the ground at a ratio of, 6, 7, 8, I don't know who you want to, 10 ounces of silver per 1 ounce of gold. But on these manipulated exchanges, it's now approximately 100 to 1.
Yeah.
Well, as they lose control of and lose as the patient dies, called COMEX, which they've used to criminally manipulate prices, in particular gold and silver, and heavy on the silver manipulation.
Mm-hmm.
As that moves further east to Shanghai, they lose control of that manipulation. So one would think that that ratio that has been manipulated to 100 to 1 would start to come back more. I'm not saying exactly to what comes out of the ground, but significantly less than 100 to 1. Am I thinking about this wrong?
No, you're thinking about it right. And I think you can make the case, I've always at least tried to make the case, that if the proper ratio, let me keep the math easy, is 10 to 1.
Yeah.
Yet it's trading at 100 to 1 in this derivative-based, as I said, is trading a futures scheme. Well, maybe there's 10 times as many derivatives in silver than there are in gold.
Mm-hmm.
Maybe that explains it. Again, that's an oversimplification. The issue with silver, though, is it's not a monetary metal, and nobody's really, as far as I know, using it as a reserve asset. So the fundamentals of gold, if you want to call it that, this physical demand, all these dollars that are being converted at every level, from central banks to large institutions down to you and I, where everybody's taking their dollar reserves, their savings, and buying a little bit of gold, that depletes what's there. Now, silver is also having a depletion of what's there, but it's more of in a traditional sense, where we are consuming more silver than we are getting out of the ground every year.
Mm-hmm.
On average, the last 3 or 4 years, it's a couple 100 million ounces. So there's this supply deficit versus the demand, the accumulated demand for it is 200 million ounces greater than the supply. That's a supply deficit. Now that eventually does ripple through, and you get this kind of forced unwind of the leverage, like what I'm thinking is happening with gold, where there's just not enough silver to go around, just like there currently seems like there's not enough gold to go around, as we talked about a couple of minutes ago. Eventually we get there. The frustrating part of it is, you sit here in the meantime, frustrated because you see gold go up and silver do nothing. So, I think it's important to be diversified. I own more gold than I own silver, but I'm confident that one day, probably not tomorrow, I don't even know if it'll be later this year or whatever, but one day silver will suffer from the same structural issues that gold is dealing with now, and that's all part of why gold has doubled in a year and a half, Dave.
Mm-hmm. Mm-hmm.
It was $1,800 back. I just remember when Israel and the Gaza thing started. In October of 2023, it was about $1,800, and now it's been as high as $3,500. It's only a year and a half ago. Silver will have its day like that too. It's just the hard part is saying, it's going to happen next Tuesday.
So my dad used to say, inertia runs the show. Okay, he goes, if you're living life and you lose your inertia, you're gonna die. You're dead. You're on the way to death's door.
Yeah.
He used to say the same thing about businesses, right?
Yeah.
Actually, we just saw it with the outage, the electrical outage in Europe. They didn't have enough inertia in the system because they were too hell-bent on the renewable energy versus the standard coal, nuclear, natural gas. They lost inertia in the system. It almost took down the entire continent, right?
Yeah.
So I see the inertia moving east. I see a lack of inertia now in this COMEX system.
Yeah.
By the way, I have relatives in Portugal and spoke to them yesterday.
Boy.
Here's an interesting thing. When all hell broke loose, they still had their physical silver. But try an exchange of Bitcoin with somebody when the electrical grid is down.
Yeah, or you can't get cash out of your ATM and you need to go get some stuff. Yeah, for sure.
So is it an overstatement, let's conclude with this, that the inertia is moved away from the dollar and paper assets, and the inertia has shifted significantly toward physical precious metals? Is that an overstatement?
No, and it's. I would combine it with the way silver trades in its current pricing scheme. It needs the inertia.
Yeah.
I mean, we saw it in 2011. You know, it moved up from 18, and then all of a sudden it was in the 20s, and then once it got above 30 and 35, and it went from 38 to 50 real fast. Because in our current world, I mean, I don't want any of that. If I own a stock and it doesn't double in 6 weeks, that thing's a dog, right?
Yeah, right.
And so in the current pricing scheme, silver also needs some inertia. It needs to break out above 33 and 35. And then people go, oh, wow, this is moving up. We ought to get ourselves some of that because it's actually moving, you know. So once it gets moving, it causes it to move even faster. The hard part is getting it moving in the first place. And so it doesn't have even the inertia in this current system. But in terms of a pricing inertia, like you said, and getting back to something, I mean, a little leverage is okay, but 100-to-1 leverage is not okay. Getting back to something that's a little more rooted in reality, that's going to allow for true price discovery.
Let's conclude with this. Best move and the worst move people can make in their financial world at this point.
I think the worst move in this particular year and everything that's going on, the worst move is to just bury your head in the sand.
Yeah, right. I agree.
You know, and just say, oh, everything always turns out okay. You know, that kind of thing. You got to be paying attention.
Yeah.
Now, look, you know, Besant has said, and I'm grateful that he'd even point this out. I mean, it's only 10% of the U.S. population even owns any stocks, or, you know, at any size. I mean, half the country doesn't even have enough money in their savings account to get a new set of tires. Okay, so, but in a sense, the stock market is the economy. You know, the stock market's not the economy. Well, actually, it kind of is.
Yeah, it is.
If it's, you know, it's like a recession is one of the few things in the world that can actually be talked into existence. You get enough people saying, and enough business owners, and, you know, it just enough people pull in what I'm not going to buy that because I'm worried about my job. I'm not going to expand my plant because I'm worried about the economy and the tariffs. All this, you can actually talk it into existence. The stock market starts going down, that starts slowing the economy, and then all of a sudden companies can't raise money, you know, blah, 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 and all of a sudden they start laying off people and this kind of thing. So it doesn't matter if you don't own stocks or have it in great size or whatever your 401k is. This is a time to be paying attention. This will impact everybody. So the worst move you can make is to just, you know, take the summer off and, you know, and, you know, and just not worry about it. You got to be thinking about these things. The best move you can make is to understand your history, know how, going back 1,000 years before Christ, in what was it Sicily. Dionysius of Syracuse was the first emperor to fund all of his wars, run out of money, and then devalue the currency by half. And he went, hey, this is pretty slick. 3,000 years or 2,500 years of leaders since then have pulled the same stunt. So the best thing you can do is understand that that's how the system usually resets, is moving back to some strong anchor. Gold has played that role for millennia. It will play it again. If you don't have some, get some. If you don't think you have enough, you probably don't. And so just consider adding some to your portfolio.
And finally, Craig, educate our listeners in how they can follow you 24/7, how they become members. I'm a proud paid subscriber, have been since the outset of your platform, tfmetalsreport.com. It's the best financial site around. Greatest information, greatest insight. Educate our listeners in how they can become part of your family.
Thank you, Dave. And I'm a proud paid subscriber to yours too, as we scratch each other's back. We're the only subscribers we have. No, but anyway.
That's how it works.
It's right here, tfmetalsreport.com. It's a global community, people that subscribe and interact there every day. So you get a really diverse viewpoint about what's going on. We're all in the same boats. We're all out there trying to help each other. That's the key thing.
That's right.
I work myself silly, it seems, coming up with fresh content a couple times a day. but it keeps people coming back to the site, keeps people interacting on the site, and that's what it's all about. So I just encourage, it's not expensive. It's only $15 a month, and I encourage everybody, give us a try for a month. And if you don't think it's worth your time, you just unsubscribe. But I think you'll find, if you give it a try, you'll find it's worth it.
I completely agree. It is the first site I go to in the morning, and I go there many times, as you know, during the day, and it's the last site I go to at night.
Thank you, Dave.
And it is fantastic. And I thank you, Craig. It is a labor of love. I know at times it seems like a labor of insanity. I know the feeling, right? Yeah. It's the amount of work that goes into content production and quality content production that helps people is enormous. And I thank you, Craig, for everything you have done, are doing, and will do. And I thank you, folks, for joining us. Until next time, Dave Janda signing off. Dream big, dare to fail. Thanks for joining us today. TFMetalsReport.com. Have a great day.